Hi, this is Garrison Comstock with Garrison Team Real Estate in the South Bay of Los Angeles, California. And today we're going to talk about why interest rates are rising and where they're going to go from here. So the first thing we track is the Federal Reserve. The Fed usually speaks in terms of, we may do this, we may do that. But then this year they came out and they said, we are going to raise rates. We are going to raise rates 3 times. And then they came out and corrected themselves and said 4 times. And now they're saying up to 5 times. Now, they don't directly raise mortgage rates. However, what they do influences mortgage rates greatly. So let's take a look at those so I can show you what is happening right now. So first of all, this is what we're seeing, right? Mortgage rates, 30-year fixed rate, Freddie Mac. We went down into the low 2s at one point, 2.5, the lowest rates of all time in late 2020. Then 2021, they took a jump and dipped a little bit. And then now they've taken another jump and we're up to like 3.5 on prevailing rates, right? So what's happening? Why? Well, let's go to another sharing screen here and I'll show you what's going on with the 10-year Treasury yield. So if you can see this, the 10-year Treasury yield is skyrocketing. It's gone from 1.5 to about 1.8 here. But then this year, it's gone from, 1.5 at the beginning of this year in December, all the way to 1.8. Now, what happens here is the 10-year Treasury rate heavily influences the 30-year mortgage rate. This is a graph of the two together over the last 50 years. So the 10-year Treasury rate goes up, the 30-year mortgage rates go up, and then they come down and they come down together and they basically mirror and match each other. It's not exactly perfect, but it's very, very, very close. And so what we're doing now is the Fed is going to continue to raise this blue line. So they've said they're going to raise it up to 5 times this year. So at the end of the year, the blue line may be up here in the 4.5, depending on how high they raise it. The blue line is going to be going like this. And that means this green line, the 30-year mortgage rate, 30-year fixed loans, is going to increase right along with it. That is why everybody expects the mortgage rates to rise. That is why the Fed's saying the mortgage rates will rise. This is what we're seeing here. So mortgage rates will continue to rise. Inflation will continue to happen. So now's the time to purchase if you've been thinking about it. If you've been thinking about getting from one house into another, obviously you want to lock in your low rate on your next house because real estate is the #1 hedge for inflation. So you want to purchase that next house earlier rather than later to make sure to get the lowest possible rate because they are going up. And by the end of the year, they will be significantly higher than they are now. And if you're a first-time home buyer, well, you want to make sure to purchase something because rents raise faster than inflation. I have another video on the channel about how inflation affects home prices. Home prices rise with inflation, rents rise with inflation, but guess what stays the same? Mortgage payments. So you do want to purchase your home now because prices are going up and interest rates are going up. So that's what I got for you today on what happens with the expectation of interest rates this year and what is going to happen, what's currently happening in this market. If you are looking to purchase something, you can reach out to me, garrison@soldbygarrison.com. Also @soldbygarrison on both Instagram and Facebook, Garrison Team Real Estate on both YouTube and Google. Please like and subscribe on this video if you want more informational content about what's going on in the real estate market. Really appreciate you watching. I'll see you next time.